back to our office at Queen West. I'm joined by my colleague, Alex Carlin. Alex, how are you doing?
I'm good. Alex, how are you?
I'm good. Amazing. How was your first few weeks of the year?
Good. I mean, it's a slow start coming out of New Year's. People are still sort of on vacation the first week. You never know how the listings are going to pick up, especially coming out of the down market that we've been in. Obviously, we're not out of it yet, but it's definitely picked up. I think kind of busy. I think you are too, right?
Yeah. I managed to close a deal yesterday for my buyers, so we are still unconditional.
Congratulations.
So that's very exciting. Good start to the year so far. Hopefully we can keep the momentum going. Today I kind of wanted to talk a little bit about, because this is the first time that we're kind of getting together since last year. So I thought we'd kind of wrap up the year, talk about some major themes that contributed to what happened to the real estate market last year, and then kind of talk about what we think is going to happen in 2026. Kind of similar to last year, I feel like going into the year, there was a lot of confidence.
There was.
Yeah. So I think things are a little bit better than they were earlier in the year, but still very much like a sideways, market. Like our economy is generally a little bit slower. Like we have slower population growth, transaction volume. 2025 sales was the slowest year in 25 years. So sales were down 16% year over year.
Yeah.
Which is well below the normal volume for the GTA market that I think we've been used to.
Yeah.
The job growth hasn't really improved. People in key industries are experiencing layoffs. So, I know a lot of people working multiple part-time jobs just to kind of stay afloat.
Mm-hmm.
And kind of, dare I say, it kind of feels like we're in a recession, or at the very least, our population is behaving like we're in a recession. But I don't know if you would agree with that, or.
Yeah, I mean, I think a lot of people either dabbling or looking to potentially dabble in the real estate market this year. They're very budget conscious. They are holding on to every penny. It was even harder sometimes to get deals done because buyers and sellers were psychologically and mentally just so far apart. And it's a totally different psychology than what we've seen in past markets, for sure.
Yeah, because it was very interesting, because I felt like the conditions were there at the beginning of the year for people to kind of enter the market and with confidence, especially so many people were kind of waiting for prices to go down, for interest rates to go down. And then they went down, and then we had a little bit of momentum at the beginning of the year.
And I was excited. I was pumped.
Yeah,
honestly.
Yeah, I think all of us were consumers, real estate agents. We were all kind of thinking that it was going to be a really, really good year. And then I guess, tariffs, Trump, all these different things kind of factored into having one of the slowest years for a long time.
Yeah, I mean, buyers took a step back. They wanted to see what was going to happen. There was a ton of uncertainty, and we've all talked about this over the last year. And I think it's taken, there's still a lot of buyers on the sidelines, truthfully. And in my head, I don't really get why, because you have the perfect storm right now. You wanted lower rates, you wanted lower prices. We have that. There's also less competition right now. Our market hasn't fully turned back around. So there's tons of opportunity for buyers right now in the market. And we definitely saw that. I was, like I said, super excited last year. We saw a trickle of activity increasing in the market. We were starting to see more showings, more offers, busier open houses. And then, everything politically, it just died again. In the summer, I swear the summer was the quietest summer I've ever seen.
Oh my, it was like crickets.
Yeah, it was honestly pretty insane. And then we continued seeing rates start to come down or hold, and now they're starting to stabilize. And judging by what Bank of Canada is projecting, they're projecting that might have been the last rate drop, last one we saw.
Yes. I'm hearing that a lot too. We might not even have any more rate cuts this year.
We may not.
Yeah, I guess we'll see. But yeah, I'd say one of the biggest themes of last year was confidence, how good someone felt about making a real estate purchase. And I think a lot of that has to do with because the market isn't hot, buyers not really seeing the opportunity out there, listing are at all-time high, and it's people want to feel validated when they're making big investments like that and big purchasing decisions like that. They want to know that they're in a company and the other people are doing it as well.
Yeah.
So when you don't have that all this buyer activity coming all together.
Yeah, I think it's coupled with two things, right? I think obviously the media speaking on it, like some people just live and die by what the media says, even if it's wrong. So even last year, you know, the headlines were very like, the sky is falling, the market is crashing, blah, 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 blah. And that wasn't entirely true. There was tons of opportunity out there, especially to negotiate, get the terms and conditions you want, the price you want on some properties that were sitting for several months even. But I think now, like I also did a deal last week, and one thing I did notice, my client was looking for about a year and a half, and she wanted a deal. All she wanted was a deal over the last year, and it just kept falling short. It didn't come together. Like I said, I think the mentality between buyer and seller was just too far apart. Seller's back then still hadn't quite come to terms with the fact that the market had come down as much. So some of the properties we were going after, we couldn't break it.
Yeah, the spread was too high.
Spread was too big. But in the last week, there were, I think, 4 properties total she was interested in. The first 3, and it was like she texted Anthony and I saying, let's go see it. We'd go that day. Later that day, let's offer on it. We get in touch. Oh, there's an offer. And actually 2 out of 4 had multiples.
Oh, wow.
So this made her immediately shift her mindset. The last one we went after, she ended up like actually coming to terms with paying market value. You know, in the end, she got the home $400,000 under what it was originally listed for, which was a pretty big win.
Yeah.
And, you know, the value was there, the opportunity was there, and she literally, I didn't even have to say it. She said it to me. She was like, I feel like the longer we go into this year, the more I'm going to be competing and the more I'm going to have to pay. And I was like,
yeah, I think it just gets to a point of like, how long do I want to keep doing this for?
Yeah.
You know, like if you've been looking for a year, chances are you've already seen like the best properties within your budget already.
Yeah.
And once you've seen those best ones, then you're kind of just chasing down the market and trying to find a deal, but it's not really what you love.
No, and to your point, like it doesn't make a ton of sense. That people don't realize that by constantly lowballing, like you actually might end up paying more in the future because you're just trying so hard to get a deal. There should just be a common ground where it's a win-win for both sides. You're not overpaying. You're getting the property at a good price that you're comfortable with, that, you know, perhaps we can get it under market value. Absolutely. In most cases, then not. You can. And getting the terms you want, getting the home inspection in there to protect you. Like there are certain elements of it that will be a win. Yeah, you just have to want to make that deal happen.
Yeah, like the value has to be there. It has to make sense. And like obviously right now we're seeing, and most people who are transacting, they are end users, they're not really investors.
Yeah.
So all these little things that come with owning a home and potentially all the risks associated with it, like people just want safety, security with like everything that was going on with the media and politics, economy. Like people just want stability. Like finding most people are looking right now, they're looking for turnkey. They don't want to have to make repairs, do renovations, fix anything.
It's true. Get out of my head. I was literally just thinking that the fact that like it's different, you know, 5 years ago where sellers would be like, okay, well, what should I do to get my home ready? And be like, well, this bathroom, small change, but it'll get you a good return on investment. Maybe changing the countertop in the kitchen, definitely slap some paint up, not slap it, you know what I mean? Nicely cut paint up. And now we're kind of having different conversations with our sellers where, you know, some things really don't make the most sense because buyers don't want to overpay. They're not really willing to pay for, you know, if you overbuild and you put in finishes that were too high end for the area or that home, they don't want to pay for what you did. They want to put their own in. Yeah. So there are certain elements to listing a home now that are different too, that people will not really net a return on investment.
Yeah, that I completely agree. That's so true. And you've been like obviously doing this for a little bit longer than I have. Like, what was the difference in like the conversations that you were having with your buyers these last, you know, few like 18 months during this like
versus what, the last 10 years?
Yeah, versus the last 10 years.
I mean, actually vastly different. Like I got into not into the market, but I got into the market as a real estate agent 10 years ago when it was just a full-fledged seller's market. I was having the time of my life. Like it was properties, you could slap a sign up and it would sell in a day. Obviously, we still did everything full service, and that would net our clients more in their pockets. As far as buyers, I mean, they were competing nonstop against, you know, 10, 15, 20 offers, and this went on for years. Now, I did see small corrections in the market where it was like, new mortgage rules, small rate changes, nothing like we saw obviously through COVID and post-COVID. Mortgage rules, just certain government intervention, even things with first-time buyers. Changes were made that made little like blips in the market, but like if you look at the 10-year average, it's doing this, and it's just going to blip a little bit with these swing changes.
Yeah, like you were actually hovering above that 10-year average during that full run that we had.
Exactly. But I mean now, buyers are very budget conscious. Like I said, they want a deal. They don't want to overpay. They don't want to compete. List low holdbacks, like listing your money low and holding back offers for a week, that is something some buyers are really trying to stay away from. So, when it comes to listing homes, if we're going to do that strategy, I'm keeping it tight between list pricing or value.
Are offer dates even working right now? Like I don't see as many going up.
There's not that many, especially when it's been like really, really dead, like in the summer or last spring, like it really wasn't working.
Mm-hmm.
I'm a big proponent of it only because it does get as many bodies through the door. Now we're not getting, when we say multiple offers today, maybe we're getting we're not getting 10, 15, 20. The rental market typically is. I heard someone was at 30 offers last week, which is insane. But I think, listing your home today is vastly different, and you have to be very strategic about it. And the list low holdback, somehow it did work for me in the last year. And I had a listing even in Leslieville that sold in about 6-7 days. We listed low held back. One buyer came through. The hard part, and something I'm seeing, I don't know if you're seeing this too, like even this listing that my client bought last week, they had been all over the map with the pricing over the last year. Like they started at 1.9, and then they went to 1.8, and then 1.7, and then back went to 1.8, and then they dropped it to 1.4. Then they brought it like crazy all over the place. And I think you have to be really careful when doing the list low holdback. I don't really think it works that well when you're listed at market value or like a someday one day price that you're never getting, and then all of a sudden you drop it. It confuses the market. I don't think buyers understand what you want. I think you pretty much have to start with a list low holdback, and if it doesn't work, then you deviate to listing around market value, and even that has to be super strategic, maybe like 10% under. You're the best deal on the block. Like
there's definitely a way to do it. Like even when I started working with my buyers now, like they're sending me listings that are priced really well, and they're on the market for like 50 days or whatever, and I'm like, and I'm checking the comps, they don't really match the comps, and then I see that it was listed for an offer date, and they don't change it back. It drives me insane because I feel like it's just wasting, because a lot of our clients, our buyers, they're looking at listings themselves and they're sending us what they want to see, right? So I have to kind of go through the whole process of explaining it to them and like, what this means and how it shouldn't have been listed at this price, and they never change.
It's so confusing. It went from, we have 3 ways to price a property: under, list, hold back, market value, or overprice. Now it's like people are just like making up all kinds of rules, and like we, even as agents who do this daily, don't understand what they're doing.
I think it's like this whole shift into like this balanced market, maybe agents don't know what to do or like how to behave in this kind of market, because they were just so used to it being a seller's market for so long. So I think there was just definitely needed to be some adjustments in.
I think especially in the last couple of years, the market we've been in, the skilled agents are those that are going to make it, and those that are not as skilled will fall off, and that's what we're seeing, I guess, 100%.
And even like with this market correction that we're in, like rent prices are down 11% compared to 2024, but our average price is still over $1 million. So I feel like affordability is still a major issue in Toronto, the GTA, even though they're up 24% since COVID. Like the average price is still well over $1 million. And I'm just wondering, like, are we actually going to get to the point this year where we go under $1 million?
I don't know. I mean, none of us have a crystal ball. Right? Like, as much as we think we know what may happen based on data and like what we're kind of seeing trend-wise right now, none of us really know. Do I think it's going to continue dropping? Condo market, for sure. Obviously, like that is probably not to run for a few years, honestly. I think we have like 20,000 new construction units coming to market over the next year of completed projects. That's going to flood the market even more than it already is. Like, that's just not.
Well, yeah, I think this is the last year that we have all these completions coming up, and then after that, they're just kind of.
I think there's only one for 2029.
Yeah. So pretty much, if anyone who purchased a condo this year, they're going to be so happy that they did, because they're not going to be around for like in 2029. We just don't see what's going to be built of that.
No, it's going to be a little crazy. Freehold wise, I mean, I think certain home types are getting more attention than others from an affordability perspective. Usually, over the last 10 years, the townhomes and whatnot that are at a lower price point to get in, those typically have done pretty well. I would say certain home types are doing really well, and I think the buyers that are also moving up into bigger spaces seem to be making moves. I know the luxury market was really busy this year when everything else was dead, which was a little surprising.
Yeah,
that's how you know that the market could be turning around. So from what I've understood is like those operating in the luxury market, I mean, they're cash heavy, right?
Yeah.
So they don't need mortgages. They're not reliant on rates. And when they're starting to make moves and move their money, and that's a good indication that it is a healthy market to get into, and people should start making moves, that so many people just sat frozen.
Well, yeah, I mean, this kind of market correction is needed, right? Like, we need it for younger generations, for millennials, Gen Z, to be able to enter the market. Obviously there's individuals who purchase during the peak, and they will see like the greatest price depreciation in their real estate asset. But ultimately that's still a very small segment of people. And like, hopefully if we're able, like, I still think prices need to come down, and hopefully if they do this year, I think it will kind of get us back on track and hopefully get us out of this.
I think in some segments we might see it come down. I think the first time buyer segment and the families moving up and whatnot, I think that's going to be busier.
So I kind of wanted to touch on what we think some trends are going to be for this coming year, some predictions that we can talk about.
Okay.
So let's start with interest rates. What do we think is going to happen with interest rates?
It's hard to say because they kind of made it seem like the rate drops were going to continue into 2026, and then at the end of the year, they're like, no, maybe not. So, I mean, if that's the case, then I do think we're going to start to see a lot more buyers come off the sidelines. We already are starting to see it. Like, I don't know about you, my mortgage broker is very busy getting pre-approvals done and whatnot. That's usually an indication. So, I think buyers are going to come off the sidelines with the rates coming down. What do you think?
Yeah, I agree. I don't think there's going to be any rate increases for sure. I think we're pretty much at the bottom in terms of interest rates, but if we do go down, it's maybe by like a half point.
Yeah, it's not going to make
it's not going to be like a major
dent in where we are, really.
Yeah, exactly. Okay, so what about transaction volume, average sale price? Do you think it's going to be more in 2025 or less?
Sales volume, I think we're going to continue going up. I think, sales volume has gone up month over month for the last, 4 months in a row? So with that being said, I mean, that I could now start to consider more of a solid trend. I mean, that kind of happened a bit last year, and then it died, and I was like, oh, well, that data meant nothing. Like, it was short-lived.
I know, the end of the year little bull that we had, and then just went straight
down. Exactly. So I think we're going to see sales volume pick up. As far as average price, especially like the sellers that are like, well, do I sell now? Do I sell in 2027? Like, what they're projecting is not crazy year-over-year appreciation. Like, we might see like 3 to 5%. So it's not really going to, it's not going to make a huge difference either.
Yeah, I think we're going to, I agree. I think we're going to continue to stay in this like balanced, right now I feel like we're more in a buyer's market, but I feel like it's going to go more towards a balanced market. I do think transaction volume will increase, but I think average sale price will go down.
You think it's going to go down?
Yeah.
Okay.
I'm predicting that just to keep things interesting. Okay, what about mortgage default? So I was listening to another podcast before this, and they were just talking about the most mortgage renewals we're going to have this year since the peak of the housing market.
Yep.
So
that's because everyone's coming due. right?
Yeah. So do you think like we're going to see more like mortgage defaults, more power of sales? Like I know we had quite a bit, like even the media started covering it a little bit during 2025. But it wasn't like a significant number that resulted in any kind of crash or anything like that.
Well, I think like holding these properties, the overhead has kind of come down if you're on variable. If you're on variable, it's come down. So it's becoming a little easier, a little more palatable for some people, but there are definitely people that are becoming more and more overextended as the year went on last year. So I am starting to see a bit more in terms of the power of sale situation. But power of sales here are different than power of sales in the US also. That's something to keep in mind. You know, down south you can get a house for like 50% off.
Yeah, that's true.
That's not really a thing here because the lenders do require that we as realtors sell it for generally market value. You might get a decent deal, but it won't be anything like down south. But I do think we're going to start to see that more and more. I think investors are also overextended because some of these rents are not covering the mortgages now that rents have come down a bit. So I think there's a bunch of different factors contributing towards that. But yeah, I do.
Yeah, and I feel like because like I honestly don't think we're going to have like a lot of power of sales or a lot of mortgage defaults, to be honest. I think the stress test kind of helped Canadians insulate really well. So like I don't see really, you know, people losing their homes or anything like that this year, but I guess we'll have to see.
Let's see.
Okay, and rental market. So I think prices are going to go down even further in the rental market.
It's tough to say, actually, just because I am starting to see some properties just get so many offers on the rental side, obviously.
But the good ones, though.
The good ones.
There's a lot.
Oh, the dumps are...
out. Like, there's just units I'm just not showing to people.
Oh, for sure.
But the ones that are really good, those are getting leased out in like a week.
Yeah, or less, honestly. I agree with you. I do think it's going to come down drastically. I'm not sure. But, I mean, at this point, when it comes to renting versus buying, like in some cases, buying is the more affordable option, or it's pretty head to head. Like it's
the spread is much lower now between like renting and buying, especially if you're like a 1-bedroom condo right now. I think that
and I think buyers are going to look at that.
Yeah, definitely.
You know, I think the most important thing going forward into 2026, I mean, if you have a plan to buy or sell, definitely get in touch with someone sooner rather than later. Preparation is honestly everything in order to be successful and have it be like a seamless and more easy process on you. Unless y'all being stressed out, then, you know, take your time.
For some people, stress really activates them. So there are definitely
I
people
operate
like
well
that.
under stress, but not everyone does. So I think it's important just get your ducks in a row. You know, run your numbers. That way we can get some listings out to you or whatever realtor. If you need our help, we're happy to help. If not, use someone that you know, like, and trust, and get a handle on what your budget is based on your numbers with your mortgage broker. Get listings out to you so that you can keep an eye on the market, get out and see properties so you can get an understanding of what you like and dislike. Just be prepared, because if it does become more competitive, you know, and you don't feel quite ready mentally, it's going to be stressful. So
yeah, the earlier you start, the better and more prepared you will be.
100%.
Especially in this market.
Yeah.
Okay, well, I think this is a great place to leave
fun,
it.
Alice.
Yeah.
We'll
Thanks
do
so
it
much
again.
for joining me today.